a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to look at IPO ETFs. Bet you never even knew there were any. Well, there are, and our ETF research director, Nina Mishra, is going to fill us in on exactly what they're all about. So are these typically worth considering?
So let's first take a look at the IPO landscape this year.
All right.
This is expected to be a record year for IPOs.
Okay.
235 private companies valued at about $700 billion are expected to go public this year, and they are expected to raise about $100 billion, over $100 billion, which would be the biggest amount ever.
Wow.
So we know about Lyft, which went public recently, Uber filed recently, we know about Pinterest, Slack, they all are going public this year, and other very high profile unicorns, which are private companies valued at more than $1 billion, like Airbnb, Palantir, they could also go public this year.
Okay.
But investors should remember that despite all the hype around these IPOs, many of these companies are still loss-making companies. And these are high growth potential companies, but they may not make any profit anytime soon.
Well, that kind of answers my question.
Yes. And another thing to remember is that these companies are rather mature companies. Earlier companies used to go public when they were very young companies. So we wonder whether best days of growth are already behind them, or can investors get advantage of their growth potential even now? So that remains to be seen. Now, why IPO ETFs, regarding your question? So these new public companies, they are rather unknown, and they are smaller than mature companies, so investing in them can be quite risky. Some of these turn out to be excellent investments, and some result in big losses. So if you are interested in investing in IPOs, maybe getting IPO ETF, which holds a diversified basket of these new public companies, makes sense. And IPO ETFs include these companies, these new companies, much before they are added in core equity indexes. Major indexes add newly public companies only after a seasoning period. For example, Google was added about 2 years after its IPO in the S&P 500 index. Now, these IPO ETFs, you should remember, they do not provide exposure to first day's pop or drop, because they include these companies only after a few days of trading.
Okay, so, so these IPOs don't come out in lockstep with the offering, with the initial stock offering. Same day that the IPO for a company goes online. I mean,
they will not be included on the same day. They will be included after a few days of trading.
That's important.
Yes, but at the same time, investors should remember that the first day's pop or drop is never any indication of things in future. It's future performance. For example, Facebook went public in 2012 at $38, and it surged initially, then it was trading below its IPO price for many days, and now it is $178. Snap, on the other hand, which went public about 2 years back, its IPO price was $17. It surged to over $26, and now it is around $11. Similarly, Lyft, the most recent example, its IPO price was $72. It surged to more than $82 on its debut, and then it went down, and now it is trading around $61, $62. So these are very volatile, and in the first few months of trading are going to be volatile. So that is why diversified exposure is worth a look if you're interested in investing in newly public companies, and also restrict your exposure because of volatility.
Sure. So are these IPO ETFs, are they made available to the public the same as individual stock IPOs? In other words,
Yes,
the preferred clients of a firm get access to them first?
No, they trade on the exchanges, and you can buy or sell
Anybody
them.
can get it.
Anybody can buy and sell them on exchanges.
Okay. So let's take a look at some of these. You've brought through two. First Trust US IPO Index, FPX the ticker.
Yes, so it holds 100 largest US IPO, and it adds them on the 6th trading day and holds for about 4 years, 1,000 trading days. So if you want to learn more about this ETF, you can go to the quote page on Zacks.com. It has an expense ratio of 59 basis points. You can also go to the external home page and you can look at other details and holdings as well. So 100 largest, best performing, most liquid US IPOs. They are added on the 6th day, as I mentioned, and they remain for 4 years. It includes spin-offs as well.
Oh.
And if a constituent with one of the holdings is acquired by another company, then the resulting entity would be in the
Reflected
ETF.
also.
ETF, yes. So looking at the holdings, PayPal is the largest holding, 9.3%, and there's a cap of 10% on each holding, so none of the holdings will be more than 10% of the asset weight. Takeda Pharmaceuticals, Verizon, some well-known companies in its basket, and as expected, IT gets the highest allocation in first sector, and there's a lot of new public companies and also spin-offs in the healthcare industry as well. So healthcare gets the next spot at about 19%.
All right, and then there's the Renaissance IPO ETF.
So this also holds US listed IPOs, and this holds for about 2 years. The earlier one holds for 4 years. So you will see more newer companies in this ETF, and constituents are added either at the time of quarterly rebalancing, so 90 days, or they can be added on a fast track method much sooner. So again, you can go to Zacks.com, quote page for IPO, to learn more about this ETF. Expense ratio is 60 basis points. You can go to Renaissance Capital website, webpage for the ETF to learn more about this product. So as I mentioned, it includes newly public companies prior to their inclusion in core US equity indexes, and they can be added on a fast track basis or on quarterly review, and they go out of the ETF after 2 years. Looking at the holdings, you will see Elanco, Wiki Properties, some very known newly public companies like Okta, Spotify, DocuSign, Zscaler. Some of these have done really well, so like DocuSign, Zscaler, MongoDB, Okta, Roku, those have been very hot newly public companies, and you will see that Lyft is also there with a weight of 1.28% in the ETF.
So are there many of these ETFs on the open market?
There are only 2 ETFs for US listed IPOs. There are more ETFs which include international IPOs.
All right, so how do these two stack up?
So on this slide, I have the comparative performance of these 2 ETFs versus the S&P 500 index for this year. So the Renaissance Capital product with the ticker IPO, very easy to remember, is up about 33%. The First Trust product, which is much bigger and holds companies for 4 years and includes spin-offs too, is up about 23%, whereas the S&P 500 ETF is up about 15% during this period.
Okay, do you own either of these?
I do not.
All right, thanks for that. Don't forget there's always more ETF information in that section of Zacks.com. All you need to do is get to the homepage, Zacks.com, and use the Funds tab in the top toolbar, and it'll guide you right to the ETF section. Also, don't forget on the podcast page of our website is ETF Spotlight. That's a podcast that Nina hosts and produces, has interesting guests and a lot more interesting ETF information, and that can be accessed by going to the bottom of our homepage and clicking on the word podcast. What else? With Nina, I'm Terry Ruffalo.